Hi everyone, it is our honor to advise you on decision of digital currency in New Zealand. We will give an appropriate judgment by analyzing the risk and effect they bring to the different market and sectors. More and more countries are researching, developing, and using digital currency, but digital currencies has many advantages and also shortcomings. It has been controversial in various countries. The most significant advantage of using digital currency is low transport cost. In addition, it is not subject to geographical restriction, which can greatly reduce the limitation of overseas transaction. The anonymity and the irreversibility of the transaction are also important factors in attracting potential customers. Because digital currency is an emerging technology, we also need to consider the risk in maturity and universality and instability of its use.
We need to take advantage of private sector innovation, and the private sector is an essential partner for CBDC. Although some innovations can be a threat, some can also be an opportunity. Digital currency is a form of money that's in an electronic form. Therefore, with CBDC, the central bank should stick to what the money has always been, which involves the role both for the private sector and the central bank or public. Since the private sector would continue to perform retail payment services, the central bank avoids the optional tasks of opening accounts and administrating payments for users. The private sector can play a role as a settlement agent in competitive payment system. Especially, private sector could record and guard users' data. To support global growth in central bank digital currencies, financial regulators and private sectors are encouraged to close their ties.
Worldwide, there is a significant risk in digital currencies. Indeed, the digital currencies have the potential to dismantle the rules of the central banks. However, there are risks profound impact on the financial systems and practice of the central banks. One major risk is that the risk of the digital currencies will undermine different business models of the conventional banks and their rules in the financial systems, making it difficult for the central banks to operate largely through the bank system to maintain financial stability. So very few central banks are considered issue their own digital currencies. Another risk is that digital currencies exist in multiple quantities, so their limited supply and existence would block the central bank from supplying them equally to all banks. In other words, there would be a shortage of the supply of digital currencies, leading to an unstable economy.
According to the latest report released by BIS and 7 central banks, in any new digital currency country, official and private currencies may reduce the deposit of commercial banks. The central bank's digital currency may pose a greater challenge to some business model of the banking industry. Compared with banks with higher interest rates on saving deposit, interest-free or low-interest deposit of large banks with a higher proportion of transaction deposit are more likely to flow to digital currencies. If banks choose to cut loans to repair their liquidity situation, deposits elsewhere in the banking system will be affected and the liquidity problem will be separated to another bank. Although cryptocurrency issuers are not bound by principles, the report points out that private cryptocurrency can coexist with CBDC on the basis that regulators believe that cryptocurrency is secure. The data-driven business model and strong network effect mean that private cryptocurrency has important uses in the future. In conclusion, since CBDC has more risks than advantages, RBNZ is not supported to issue CBDC.